FTX, the Bahama-based crypto exchange company, is reportedly closing in on buying the crypto trading platform BlockFi. It is also rumored to buy the online brokerage company Robinhood. According to CNBC source, FTX is expected to pay roughly $25 million for this acquisition, a 99% decrease from BlockFi's last private valuation, which was around $4.8 billion, according to PitchBook.
Is this true?
Right now, cryptocurrencies have been in huge decline, resulting in crypto trading companies getting into trouble. Bitcoin is sitting around $20,379.80 at the time of recording this, which represents a roughly 68% decrease from its all-time high value of around $64,000 last year. Ethereum, on the other hand, sits at around $1,167 at the time of recording this, an almost 76% decrease from its all-time high value of $4,800. If you happen to buy crypto at its all-time high and you're holding the bag, here's a virtual hug. Crypto trading platforms like Bevel Finance, Voyager Digital, Celsius, and I know what you're thinking, not the drink brand, and Coinflex have recently suspended customer withdrawals due to extreme market conditions. On top of that, Three Arrows Capital, a crypto hedge fund, filed for bankruptcy as the company couldn't pay its loans due to the drastic change in Bitcoin's price. Buying companies for what seems like pennies on the dollar, where have we seen that before? SoFi! In this video, we'll go over key details of FTX acquisition of BlockFi, the events that crippled the FTX's acquisition of BlockFi for what seems like pennies on the dollar, the events that crippled the whole crypto industry, how this acquisition would eventually help FTX in the long run, and why they chose BlockFi instead of SoFi and even PoFi. We will also discuss the rumors about FTX buying Robinhood. If you use Robinhood, holding a crypto bag or both, watch until the end of this video. You don't want to miss any of this. Please note though, we're not financial advisors and none of this is financial advice, so always do your own due diligence. In an official press release published on BlockFi's website, the company revealed that on June 30th, the company had signed a definitive agreement which includes a $400 million revolving credit facility which is subordinate to all its client funds and an option to acquire BlockFi at a variable price of up to $240 million based on performance triggers. This agreement is still subject to shareholders' approval. According to BlockFi, the agreement could potentially represent a total value of up to $680 million. Furthermore, according to their press release, what's led to this agreement is Celsius's suspension of withdrawals, which doesn't have any exposure to BlockFi, and Three Arrows Capital's filing for bankruptcy, which left BlockFi holding an $80 million bag. In a podcast titled Zach Prince, BlockFi on Navigating Through the Storm last June 24th, 2022, BlockFi CEO Zach Prince talked about the events that has stressed the crypto industry and his expectations in the up-and-coming months.
Yeah, so UST Luna, Peg stablecoin melts down, it takes down the Luna cryptocurrency with it. Three Arrows Capital, liquidated by lenders who had collateralized positions with them, and defaulting on lots of lenders who had uncollateralized exposures to them. Celsius pausing withdrawals, Babel pausing withdrawals, Voyager announcing its Three Arrows Capital exposure earlier this week, and Coinflex pausing withdrawals. And unfortunately, Matt, my best read on the situation right now and the expectation that I'm setting, with the board and with the team at BlockFi is that this is not over. I think we're going to be, seeing a pace of things like this happen for more time into the future. And certainly I encourage folks to, prepare themselves or their businesses for that being a potential here. Look, I think there's some parallels here to 2008 and 2009, and this is some crypto version of that. And so, there's been a lot, and I don't think it's over.
These events have no doubt left the crypto market in chaos. FTX buying the troubled BlockFi may seem like FTX sending a message to everyone that all hope is not lost in the crypto industry. Here's a clip of FTX CEO Sam Bankman-Fried on how this acquisition will help FTX in the long run.
I think that there are synergies between the businesses. I think, if you look at what BlockFi has built out, I think they have a loyal customer base. I think, they have a real business model. They have a card program that people love. They have a strong, they have strong leadership. And I think that we have been focusing on a lot of the back-end infrastructure, right? On, everything from the exchange, the matching engine, risk engine, and everything else. And those match up somewhat nicely. And so I think that there are a lot of ways that our products can work together and can mesh together in a way that's sort of better than, either would be independently. And I will also say that, they've been working really productively with regulators on, building out regulated yield products and licensed yield products, which we're excited about and excited that they've been doing it in a regulated way. I think that's a healthy way to do it. And I think that's going to serve them well, long term. And it's something that, we're excited to work with as well.
You had told Politico that
according to Bankman-Fried, one of the key factors that they saw in BlockFi is the company's ability to manage even in a very volatile market.
There's a line of credit. There are other things we could be discussing with them. The other thing I will say though is, in terms of where they are from a capital perspective, we thought hard about, who we wanted to work with and partner with here. And, we, did not, it's not an accident, who we ended up working with. And, that I think says a lot about their ability to effectively manage risk even through this very volatile period. And, I think that, we're excited to be able to, further capitalize them so that they can be operating from a, position of strength right now. But I can also say that they weathered, the last month much better than many other similar businesses did, and came out of it with without a sort of gaping balance sheet hole in the way that other players did.
But what exactly differentiates BlockFi from its peers in the crypto industry?
Let's start with risk management. We have a page that, until the last few weeks, I don't think was that interesting of a page for anybody, but we have a page on our website that we'll also link to in the show notes, where every quarter we publish a report about, our risk practices, our liquidity management, and composition of our book. We'll link to the page. I encourage folks to look at it. Specifically, what are some of the fundamental risk management differences, knowing what we've learned about Celsius and comparing that to BlockFi. Two fundamental ones that I want to call out: asset liability mismatch and duration management. So let's talk about asset liability mismatch. Asset liability mismatch happens when you are taking in a liability in a currency, let's say Bitcoin, and then transforming that currency into dollars and lending out the dollars. So what happens there is you've borrowed Bitcoin, so you have a Bitcoin liability, but then you've lent out dollars and you've transformed it in the middle and you have a dollar asset on your balance sheet. That type of asset liability mismatch is something that fundamentally BlockFi has never done. We are matched in terms of liabilities and assets by currency, which is really, really important. Second thing, duration management. So you'll see on that page, for anyone who clicks on it, that our policies are that we aim to hold 10% of all a minimum of 10% of all client balances on hand at any single point in time. What does that mean? It's just sitting at a custodian or in an MPC wallet that our security team, has built an infrastructure to manage. 50% of our assets are short duration, where short duration means 7 days or less. So on the asset side, when we're making loans, we aim to have 50% short term, and then 90% within a year. So 90% or more of the lending that we do is 1 year or less. So this duration management concept, if you have something, let's use ETH and stETH as an example. If you have something like ETH and stETH, ETH, you can, if it's held as ETH, you can go in and out, it's ETH. stETH, you have to wait on the merge. You have an undefined duration on that asset of stETH. There's a market for it, but turning it back into ETH 1-to-1 is questionable. Same thing for staked ETH. I think that's the easiest example for folks to wrap their heads around in crypto terms. But what's an easy example to wrap your head around in terms of traditional banking terms? Traditional bank, take an overnight deposit, make a 30-year mortgage. That's a long duration mismatch. And so I think that we have much more conservative duration management policies than what we now know other folks who, on the surface level have a similar business model to BlockFi were doing in terms of how they managed risk. So there's a lot more conservatism there. And one more thing I would add on the duration management is the structure of our interest account product. Our interest account product is our most popular product. Folks can earn interest on their Bitcoin or stable coins or Ethereum. Now, the terms of service for this account give BlockFi up to 7 days to process a withdrawal. The reason that's how the terms of service are written is so that it matches with that 7-day duration in our risk management policies for 50%. We have basically never enforced the terms of service on our interest account of 7-day, withdrawal timeframes, including over the last 2 weeks. What we have continued to do is what we've always done operationally, which is where when folks are making a withdrawal, it gets processed in 1 to 2 business days. Some withdrawals get flagged for, security reasons. Folks have to go through an incremental KYC check. That's really important in terms of safety. Folks' accounts get taken over. And so our security and fraud systems have flags that get flown or get raised. And if a flag gets raised, you have to, make sure you are the person that owns the account before the withdrawal gets processed. So there's our terms of service, which is 7 days. And it also has withdrawal limits by currency. 1 million, we'll link to this page in the show notes as well. 1 million per week of USD, some amount per week of BTC. We also haven't enforced that part of it. We're still, even through this period of heightened withdrawal volume, operating the same way we were before all of this craziness that we're currently seeing started. And I'm so proud to say that we're doing that.
Now, let's go to FTX potentially buying the online stockbroker Robinhood. In May of this year, FTX US expanded its business model by adding stock trading features to its platform.
United States investors want to be able to invest in a variety of different things, not just crypto, but also stocks. That is what people are traditionally using their money to invest in. And if they want to invest in stocks, you're not going to want to have to split their savings between 2 different apps or have to move money around between 2 different accounts. They'd like to be able to have one holistic experience where they can invest in multiple asset classes from a single app and experience. And so that's what we're hoping to provide by combining stocks and crypto into the same application for our users.
This additional feature to the FTX US platform may seem like a good decision on FTX's part, but is FTX really looking to acquire Robinhood? In an emailed statement, FTX CEO Sam Bankman-Fried said that they are looking at possible ways to partner with Robinhood, and he also made it very clear that there are no active talks of acquiring Robinhood between his company and the latter. In his recent interview with Bloomberg, Bankman-Fried expressed that FTX's default is to build whatever it needs internally.
I think, building is our default. Like if there does not end up being, if we don't buy, we will build. And that's what we are gearing up to do, is to build out everything that we need internally. And we're not in a place where we need to make any acquisitions. We are comfortable not doing that. But that doesn't mean that there aren't companies that we could potentially be excited to partner with. And so, I think this is less thinking about what do we need here, because as you say, we could just build instead of buying. And this is more, identifying potential opportunities, if there are any, for us to, grow, further and faster than we would by default.
There are 2 key things that FTX CEO Sam Bankman-Fried is excited about in acquiring BlockFi.
And I think what I would say, there's 2 things. First of all, I'm way more excited to bail out customers than shareholders, right? And so the focus of this is not how do we deliver as much shareholder value to troubled assets as possible. right? It's how do we protect customers? And I think those imply pretty different things. So that's one thing that I'll say. And I think that one of them is way more important for the ecosystem, and the other is the one that has the biggest moral hazard. The other thing is that we are trying to find who were the responsible players who were building out, a good business, had a sustainable model, and could use short-term liquidity, and that could help protect customer funds. Fundamentally, built a real valuable business that I think had something real to offer to customers, rather than which companies honestly should never have existed, probably. And as of today, maybe we should just let them sort of die a quiet death. I do think that's something that we have been thinking about, and that does play a fairly significant role in which specific companies we end up deciding to work with.
FTX's expansion to stock trading could mean that the company is working on its own trading platform. That's why there aren't any talks about Robinhood on the table. FTX acquiring BlockFi at such a cheap price may seem like one of the best moves for the company, considering half of the buy low sell high approach is buying while something is low. But apparently a lot of people prefer the buy high and then sell at all-time lows approach to maximize losing money. The current turmoil in the crypto industry, however, raises the question, how far can FTX go in order to save BlockFi? Shout out to all of you who showed support in our previous videos. A special shout out to everyone in the Patreon community who helped to make these videos possible. We really appreciate all the support. Shout out to Arthur Magazu, Wei Chu, Daniel Corbett, Mr. Welfare, Casey Patel, Jeff Sherman, Gregory Villar, Bo Park, Denzel, Reginald Davis, Les Broadway, Christian Cardelphi, Kevin Beaufrond, Jay Bone, Daniel Zinson, ABC Sam. If you gained any value from this video, don't forget to subscribe and like this video, as it helps tremendously with the YouTube algorithm. Also, don't forget to turn that notification bell on so you're updated as soon as we drop a new video. And that's it for today's video, guys. Thank you for watching. We greatly appreciate it. And until next time, peace.